All right. Good morning, everybody. So we're back at it again. Um, the 30 years, the biggest thing on the table today, really that and any gotcha headlines that we can't see coming. Small caps down the most, but just barely. NASDAQ flat with the S&P, the Dow barely up, slightly more than a dime. Japan, a little more than a quarter. We continue to see confidence in the broader market expanding. Peak confidence was pointed out multiple times looking at allocation limits. Last month, there was record buying from retail. Uh, just the flood of money that continues to push into the market. The thing is, there is that old phrase, right? That there's two phrases that are either side of this coin. Be fearful when everybody is exuberant. Get exuberant when everybody is fearful. That's an old one everybody knows, right? So here we are, everybody's piling in and buying it at the highs, and we've got nonstop frenzy of higher and higher and higher. It's a good time to be fearful and maybe shop around for some trades to the downside. But then there's the other side, the other phrase that the market can remain in a frenzy longer than you can remain solvent. So sure, we can point out all of the things that are indicating weakness or that are greater and greater risk, and that it's peak confidence and it's extreme and it's a melt up and blah blah blah. But that doesn't mean it has to end anytime soon. It can just keep on doing what it's doing. So if you're going to try to position to the downside, make sure you add some time to it, because you can't time it, and it's very likely going to come when nobody sees it coming, right? That it has almost always in the past been some unknown, unforeseen event that suddenly popped up, and everybody say, "Oh, I never saw that coming," and everything just collapsed all at once. Because generally speaking, if the market can see it coming, it prepares for it, it hedges it, it prices it in, and then it's not a thing. So it's almost always the unknown, and you're not going to see that coming because, well, you didn't know about it. That's why you just run a beta weighted portfolio and it doesn't matter. So we got the 30-year today. That's the one that's really my number one focus today. Um, this opening remark from Powell, I believe that's pre-recorded. No Q&A, no gotcha moments, no misunderstanding or misrepresenting his remarks. We're not going to get data because the government's closed. So a whole lot of Fed speakers chipping their teeth, some after hours. It's not going to have any impact. They're all saying the same thing that they've been saying. So the 30-year, that's the one that is highest on my list of things that could impact us today that we know about, which is a real big piece of the puzzle, right? Because we could get information at any time. There's a number of events that are unfolding. You got the ceasefire. You have the possibility that the president may respond to China's new rare earth adjustments that they enacted last night. There's a number of things that can kick off. Plus, of course, another round of voting. So who knows, right? And it sounds like France may have things under control again. Although we'll see how long that lasts. Well, so far this morning, the market's being led by airlines and pot stocks. And we don't want a market run by airlines and pot stocks. The put wall rolled up again today. That's worth paying particular attention to. Our distance to 0 gamma is 44 points. That's within yesterday's trading range. So if we fall back inside of yesterday's range, which we are just barely peeking outside of it right now, then we can focus on getting through the mid, then the RTH low, 0 gamma, the full low, then we'll worry about Tuesday's low, which is actually the low of the week. All right, the 786 lines up with a 0 gamma level, 67.97. Or it's a spot gamma level, not a 0 gamma. Spot gamma level. So if we make an attempt to break back down, you got 6,800, big round options level, 786, which is also an options level. Then the 92 COG, the 3-period daily, half back, volatility trigger, put wall, yesterday's RTH low, 0 gamma, the full low, and the 10-day is in there too, right on top of 0 gamma. That's prescient. Getting through 0 gamma and getting through the 10-day, they're going to have just about the same consequences. That would be where we need to really start to monetize that 6750 area. It's the low of the week. If we begin to expand significantly below the 6750, it's just going to get really bad really fast. And we will go to 6650. Remember, we're running 50s. With this channel that we're in, we've only got one options level from spot gamma within our playing field. Otherwise, we've got to get to the edges to get to the call wall or the volatility trigger. So far today, we have an MDP. That's a missed daily pivot. It's just like it sounds. This is our pivot point, and we haven't hit it yet. So far, we're getting hung up on the channel. Today's floor pivot is higher than yesterday's. That's bullish. Price opened above it. That's also bullish. But we have a bias that we're going to go down just to hit this. Markets hit their pivot more often than they don't. So the odds are that we'll hit it today. We don't have to hit it. That's where the classification of a missed daily pivot comes from, is because we make it the whole day without hitting it. But it won't count until tomorrow because, well, at any time today, we could go down and hit it, and then it won't be a missed daily pivot anymore. But if we continue this move to the downside, break our own Globex low, that's the target. It doesn't seem like much, but it's 6 points. 10 to 15 contracts and a 6-point move, your day done, go do something else. Right? It's as simple as that. All we got to do is break the Globex low. Otherwise, we do have the opportunity to run back up, get through 68.11 cog line, which is the Globex high, and we could aim for 68.25, 68.50, because we're still running 50s. We are still holding above the weekly pivot, and we are not too far away. The qualification or classification of our distance from the weekly floor pivot is fine. So we could expand into 68.50 pretty easy. We had a decent run yesterday, and there's often a belief that if you had a big day yesterday, it's unlikely that you'll have another big day today. That's kind of true, but don't think it can't happen. The last time we had one of these really big days was here. It doesn't seem like a really big day from this perspective, but it was a pretty good sized day. And we ended up giving nearly all of it back afterwards, right? The very next day, we just unwound the whole thing right back down again. So that's certainly possible that we just unwind everything that we did yesterday. But there's also the idea that we just get another day to the upside and don't take that off the table, especially if people are trying to short into it. That'll just add fuel to the fire and push us even higher. So rather than approaching all of this with a preconceived idea of what price is supposed to do today, just set up your levels, see what breaks, and trade your response from that. I know it's a wild idea, right? Let price tell you where to go rather than you just assuming you got it all figured out. I do want to start positioning to the downside, but the time frame will be like December, January on the take profit or the targets. And we got to see how banks kick off. So I'll be doing the work between now and the start of the new earnings season. And then as things begin to unfold into the earnings season, I'll lay out the list for the shorts. Because I really think that that's going to be the catalyst is earnings. If these companies can't prove that they're able to monetize and that all the money that they've been spending has not, they don't have a path to reclaim it, then I think pulling forward all these earnings is going to show that there's nothing to pull forward. And if we don't see that and earnings are good and we continue to drive higher, then it won't be time to develop those shorts. Again, that's why, running beta weight is just the proper way to go. These shorts won't be hedges. They'll just be short trades because I don't need hedges. A short is just a short. If we can get through the cog line, we've got 68.21 overhead. That'd be the R1. Between R1 and S1 today, it's what we want to focus on. That's our playground. It's also lined up with yesterday's floor pivot, so that works out really nice. we could stay in that range and do nothing else for the rest of the day. Just sit right there and chop. That would give the market time to digest the moves that we've had and get a little correction in time rather than a correction in price. And then we could see what tomorrow brings. And there was some confusion about Columbus Day. The markets are open, guys, or at least equities are. Bonds are going to be closed, but equities will be open. All right, so that distribution that we've been looking at all week is playing out. We're building this zone still, this 6770 area. We were building it out last week. We got more of it this week. But the point of control is really up here at this 6800, which is a little bit of a surprise. All right, we got 67 down here built out nice. Now we got the 68. It's almost like it's wanting to shift out of that running halves, but I still like the halves. So that's what I'm going to continue to lean on. Even this week, it showed the strength of those halves when we dropped down into that 6750. You know, it's not like we dropped down to 6700. Nope, we caught the half and turned it around. All told, this is a relatively tight distribution. And now that we've got this liquidity gap closed and we were able to keep it, and we're setting up this minor little TRB. Remember, a TRB can run back to the top in a single shot. One candle can get us back up there, right? That'd be like a daily bar, but a daily bar wouldn't show it this way. It's only a 10-point run. Ten-day, 30-minute volume profile and TPO. We brought that point of control up like we were talking about earlier this week, and we're still above it, and that's what we want to keep. 6750 is below this point of control, but it's not below the zone that we had already talked about. So this point of control, it's not a support or resistance level. You don't want to see it that way. The only way it would really, quote, act as support or resistance is if we left the range and then we tried to come back to that range. But as long as we're within this same boundary, we can cross through this thing. But the lower edge of that boundary has already been established. So it's the 50, right? 6750. We could cut that point of control, come down into the 50. As long as we stay within that 50-point radius or 50-point range, then we're good. Once we expand below 6750, then it's game on to the downside, and we'll look to test the value area low and then the expansion down into 6650. It will be nice if we can keep above this value area low. As we get into next week, we're going to be getting a much narrower profile. Maybe we can clean some of this mess up. We still got this key level down here. I'm not done with it because the markets aren't done with it. So we're just going to carry that forward. It's not a VPOC because we did hit it already. But I'm keeping that one for right now. So far, we've got nothing. This candle from Tuesday is the one that you want to focus on. That's the boss. And then, of course, you have yesterday's range, which is always something that we pay particular attention to. The range for the week was 68 to 63. It's all the way up here. We closed on Friday at 63, at 67, 63. So we're looking at 100 points between those. And we haven't done anything, right? We got this little 40-point move, and that's it. We're just hanging out here. Fighting last week's high. So sure, we're above it. You know, we closed above it yesterday. We're still above it this morning. You got to get the work done to really expand beyond it. Otherwise, it's going to continue to be a threat, and that we can just fade back down inside of yesterday's range. We're still good on the 10-week, 3%. That's a good place to be. We're not overbought. We're not overextended. It doesn't owe us anything. And on the daily, yeah, we're not even 1% away. So we're above the 10. We're in a healthy spot, and we're not overbought. There's no reason to think that we're headed to the downside from any sort of mean reversion perspective. So we got jets, uranium, precious metals, or metals and mining, nat gas, triple China. I mean, this is not what you want if you're looking for a rally day or a continuation of yesterday's exuberance. This ain't it. All right. Airlines and pot stocks is not what you want to control your rally day. But looking at what's down, there's nothing that's negative on this side that would really cause me too much concern, except Bitcoin being down 0.5%. You know, I turned that shader on this morning because I had a headache, but it doesn't seem like it's really getting it done. Let's turn that off. That looks normal again. So keep your eye on Bitcoin. If we start to see that spread out, a little bit of weakness is fine, but we don't want to see it really bleed too much and get into other things. The crypto's sneaky, right? When you think about the stuff that's in it, it spreads out farther than you would think. Things like AMD and PayPal, NVIDIA, you know, if those names don't come to mind when you think of Bitcoin, then you're missing the point, right? This is an ETF, well, a homemade ETF, developed from the Tasty Trades Smalls Exchange product that they were running, that crypto Smalls. And if you open up that basket of stocks, this was the list that was in it, to where it came from. Things have changed since then, right? This is a pretty old list, but still. So the Mag 7's down 0.25%. China is down, but those aren't enough, right? The benchmark is 0.5%. So being down just a quarter, it's not really that big of a deal, especially since we're not even getting any real prints. We're just getting some algo dots. And it had a heck of a run. So we would expect it to digest that a little bit. Right now, it looks like the current dot is around 65. It's down here. And since we closed up here, it says, we're down, but it's just a dot. There was a dot way up here, so, then dots don't mean much. Need to see it unfold. Get some real candles in there. And the run, I mean, it's got to digest. We're still holding above the 20. We're working on the 10. Now, Bitcoin's kind of spread out a bit more, but it at least has some candles. And it's holding up. This has got some work to do. Yeah, it's pretty ugly. But if we're looking for the answer, right? That's what we're always looking for. Can we break out today? And if we do, where are we going? Well, we already did break out and we weren't able to keep it. We came back inside the line. Now we're running this zipper program around a VWAP. Break our Globex low, get that floor pivot, and then it's just level by level after that. Run it on down. Otherwise, get back outside of yesterday's range, break our own Globex high, give it a shot to the upside 68.25, and then 68.32 cog, 68.50, level by level, right? Run it all the way back up. But at this point, if we're looking for what's going to be the catalyst, it won't be the equity markets, right? We don't have the Mag 7, we don't have semis and chips and tech. And if we don't have that, then it's not going to be equities. It's going to have to be something else. Commodities, treasuries, it could be 0-day options once we get in, right? It could be that, but we can't see the 0 days from here. It could be headlines, and we don't have those yet. So that's what I got. Keep your eye on the breadth. See if it begins to expand, that rising tide that lifts all boats. And I'll see you guys tomorrow.